Hi, everybody. We're going to talk about Unit 34, sole proprietorships and partnerships. Okay, so let's get to it. What's a sole proprietorship? Basically, everything we have looked at so far, every business example that we have looked at so far is a sole proprietorship. Why? Because it is owned by one person. That is key. It is owned by one person who is responsible for all the debts, so everything the business owes and everything the business is told to do legally. So that one person is responsible for everything. Okay? So, like I said, many small businesses are sole proprietorships. I ran a sole proprietorship business. I ran a window cleaning business twice for 2 seasons. So I know exactly how it goes. So little mom and pop shops, convenience stores, many things you'll see as sole proprietorships. Okay. So the big thing is in a sole proprietorship, the owner is personally liable for the debts of the company. You want this highlighted for yourself. What this means is if the business owes somebody something, that means the owner owns that person something. So say if we have Courtney Enterprises and it owes money to Sarah Enterprises, that means if the business fails and if the business, something happens to the business, Sarah Enterprises can come after Courtney and Courtney's house, Courtney's car, Courtney's personal assets outside of the business. So in sole proprietorship, that's the big risk is the person that owns the business is responsible for everything for the business. Okay, so there you go. This means if the owner's personal property is at risk if the business is in financial difficulty. Okay, so the owner could have to sell their personal automobile or pay the business debt. You could be forced to do that. All right, let's go to the next page. So let's look at the advantages and disadvantages of a sole proprietorship. So this is true. There is a lot of pride of ownership. Decision making is very simple because you're the only person. Because again, you're the only person, it's very easy to start a business and close a business. Like I did that with my eyes closed. Um, all the income comes to that one owner. You are free to make decisions on your own. Uh, that's personally satisfying. It's private because only you know what's going on. And the tax savings, you don't have to worry about. Actually, there are tax savings. We'll discuss. We may discuss how how we save in taxes when it's a sole proprietorship. So this word you want to understand is unlimited personal liability. That's basically saying what we said earlier is the unlimited risk. So you want to know what this personal liability means. That's basically saying unlimited risk. So any one that's dealing with the business, if something bad happens, your personal assets are at risk. Okay, so your house could be taken away, your car could be taken away, say if you cannot pay your debt, or if you get sued, they could come after your personal assets. Limited capital means because you're the only person, there's only so much you can invest in the business. Okay, that's what limited capital means. Limited talent pool means since you're the only person running the business, you're the only talent there is. Maybe your employees can contribute talent, but then they may not be as good as you, right? And you may not have as many people as good as you. Well, you don't because you're the only person running the business. And because you're the only person running the business, there's a lot of work to do. And you're the only person to do it. Okay? So, and if something happens to that one owner, the business is done. It's all gone, right? That's those are the disadvantages. All right. Uh, Taxation and sole proprietorship. So how do sole proprietorships get taxed? So a few of you have filed tax returns for um, a few of you have filed tax returns for your own income, right? So businesses that are not sole proprietorships have a tax return just for that business. But for sole proprietorships, what happens is the sole proprietorship does not pay income tax, does not have a tax return. All of sole proprietorship's income goes on the owner's tax return. So the owner must add the net income of the business to his or her personal income. Now, this may be the owner's only personal income. The owner may have, say the owner has, let's say Courtney, we know that she works at the grocery store. I forget the name of the grocery store. Um, and so she works, she has her personal job, okay? And she has Courtney Enterprises, right? Which is a business that say she sells jewelry, okay? So both of these, the income from both of these will be put together in one tax return. So her personal job and the money from there and all of the net income from Courtney Enterprises will go in one tax return. There will not be a separate tax return for the business. All right, and yeah, that's the big thing is that there is one tax return.